you can see the pound CAD for a significant period of time has actually been the most profitable format for hedging because, when you're just going up and down like this, it's really, really easy to trade. Because the market is so subdued for a long time, I'm happy to take a more reasonable size, but I'm also wary of the fact that because you've hit this support so many times, it may be vulnerable to a break to the downside. So I will put it on the daily scale. I think people get a lot more from that, it seems. This move that you're looking at now, it's come above your early MAs. And I could really just swing it to the top side. If I wanted to, I could wait and see if that happened. The entry you can now see has gone a fair way. So in this case, I'm not going to do that. I am just going to take some light shorts in between. Okay, now we're getting a bit of a steeper uptrend trajectory. I can immediately hedge that short. And if I want, I can just leave that hedge on. So I can take $86 there. I'll take another 0.04. And now I can take that one off for $100. That one away. And now I can do something a bit more sensible with a 0.1. Okay, so take that off for gains. And again, I don't want to go heavy on shorts. Okay, and I'll take that off. And because we haven't fallen in an enormous way, we have come to these early MAs. I'll take a long, light long that is, take that one off. Looking very bullish to the upside, so I'm not going to dive in short. Take a light long again, just in case. Pop up, take it out. Okay, key price action ruling that. So you can see the price is trending to the upside, and now I can put something more reasonable in. Still going to go light because if you break to the upside, you've come an awfully long way down for a long time. You're at the top end of this range, more or less, so I wouldn't expect too much further. Okay, so I'm going to take that out for gains. Now I'm going to take this really lightly long. Okay, my entries are always relative to, the previous move. If you've hardly retraced, then there's no good, taking massive longs because markets are waves of movement. And essentially, if you're hedging, you're trading in and out of those waves. So these sideways movements, long term, are very, very good for gains accumulation, which are going to support you in effectively just managing your drawdown as time goes on. So if there's a time where you need to buffer yourself a little bit, this helps an awful lot. Just going to take that one away. I'm going to add 2 of these. And let's have a look. Just waiting for some real movement, and we'll get into some hedging scenarios, hopefully, if we get a bit here or there. We're accumulating gains decently. Okay, now falling, I'll add another 2. Sometimes it doesn't pause very quickly. Let's just be wary of that. So light gains there. Light gains here. Add 2 there. Just take those off. And just let things run a bit, I think. I could add something light there. Gains. Add something light long. And then much lower, I'll go back to normal. So I'm going to go for a 0.15. Okay, and head short, light. So all the while, this is really good exercise because although you are going sideways, this is still a decent range. 1,000 pips or however much, that's very decent. But, even if we're wrong on entries, our sizes are so small and we're hedging in between those entries that it really doesn't matter if we're wrong, as always. The point is just keep accumulating gains, whether it's long or short, doesn't really matter. As long as your sizes are manageable and you're not putting yourself at massive risk, you can keep hedging either way. So take that off, gains, add 2 of these again, keeping the size dramatically light. Kill that. Great. Kill that. Fantastic. I'm going to add a long because this is a little bit tight. Or it looks like you're going to rally above it with a lot of momentum. Take that off, add 2 light shorts. Okay, so a lot of price action trading I'm doing here. Again, I'm just not willing to go too wild on those shorts. Take that off. I don't know why that long's still there. Pretty sure I thought I removed it. Obviously not. I'll just take it off now. 2 longs here. Okay, and because we don't have stop losses, we won't get stopped out when we would have been right. Big advantage of hedging is the no stop loss aspect. Because if price flashes to where your stop would have been, you're not closed. And you can just keep trading the entire range. And since trends range naturally and inherently, you get a massive advantage, whether it's a sideways trend, upside trend movement, or downside trend movement. Doesn't really matter what way markets go. The key takeaway from all of these videos is it just, you don't have to live that world where you're always going, oh, well, I wonder what way price is going to go. People ask me all the time. My response is always the same. It doesn't matter. I don't care what way price goes. I can't care what way price goes. I'm a deal maker. For some reason, that long didn't close when I pressed close, but again, doesn't matter what way markets go. And ultimately, what I'll probably be able to do is shut that off for gains anyway. I'm just going to take 2 here. Okay. And so we're really seeing downside movement, but we've got a nice pop and another nice pop. $29 out, $27 out, $48 off. And that's it. $2,000 net gains. I took longs, took shorts. I hedged the longs with shorts, hedged the shorts with longs. 3 losers, 93% win rate. And those gains just pile on and on and on. Now, remember as well, that was a very low drawdown example, low risk example, sorry. So you don't see really any dips in your equity curve as it goes up. And this would buffer then a time where you do get quite a steep move against you. So if you're someone who's thinking, okay, that's great, but the market was going sideways, that's true. But if you're using stop losses, you might have struggled. And if the market stops going sideways, I'm still going to be able to use the money I've made to protect myself. And then when markets go back to normal and the drawdown settles, I can withdraw and take those profits home to the bank. So a price action sort of scenario that you've just seen there with a very high win rate is essential to make hedging work. You've got to be hitting winners very frequently. The ratio here is 40 winners, 3 losers. That is possible because there's no stops. Max consecutive losses 1. You're not wrong in a row a lot. And that's really the kind of thing you want to look for if you want success. Thanks for watching. See you in the next one.